and let's get into it then. So last week I highlighted a trade that I was looking to teach, which was the trade that I have put up on YouTube, and we're looking for the exact same setup again today. Now there's some nuances, there's some aspects I don't really like in terms of the probability of this trade becoming successful, and I'm going to go quickly through the reasons for that. Look at, this is the S&P 500 now in the top right hand side. You see how this is the weekly time frame, and the S&P has been moving up. NQ, the other equity, has been moving up, and now the Dow Jones, if we look, and I'm going to add in the weekly open, will be moving down. So we have a mixed market, which is not essentially what I want to see for high probability trading conditions. Now, with that in mind, out here was the previous week's low. So liquidity would have been resting here, and it's been tapped into, as you can see there. So one of the reasons that I don't particularly see this current trading day, this trading market in relation to my model, which I taught last week, where we look for this model to play out on a Friday, is the fact that we have a mixed market where one of the equities, in this case YM, is not in agreement with ES and NQ. So it lowers the probability. So if this lowers the probability, does it mean I do not trade? Well, potentially. But at the same time, if I'm going to trade, what I'll do is I'll trade with less risk. So what I mean by that is less size, and therefore you'll see me do that because I am looking to get into a trade. Now, secondly, if we go now into, let's just pull this over to here and then go into the hourly. We should be able to pull that back across. Let's make sure it's visible. Here we go. Again, I've got the session breaks on here. Weekly open, we have Monday's trading, Tuesday. Now Wednesday, we traded a lot higher. Now I said in the last lesson how we want to see one-sided price delivery all week long heading into Friday. Now we haven't seen that here. We had a move on Wednesday which actually traded quite aggressively to the upside, and that was on a CPI release. And then we ended up trading lower, lower, lower. So again, there are two things here that, in my opinion, make this setup not exactly an A-class setup, but actually one that is still on the table, because we have still been trading lower since Wednesday. We are below the weekly open, and it is Friday. So if we're grading a trading setup, this would not be an A-class setup. That's what you're going to see me do today. And if you noticed, I'm on micro E-mini Dow, not the normal Dow YM, I'm on MYM. So you can trade with lower size here. One contract is a lot less size than trading on just E-mini Dow, which would be YM. This is MYM, the ticker is MYM. So we're going to drop now into the 15-minute time frame, and I'm going to add something more to this. So as you can see over here on the left-hand side, we had a low from back here. We have ran the liquidity from that low, which is what, the previous week's low. We've had this really nice reaction to the upside. Now, if I apply the fib, we may have already actually retraced potentially, or quite close to, the 20 to 30% region. So we apply our fib. This gives us the region whereby we have the 20 to 30% region. Now, as I've been discussing this, we potentially missed the trade, which is fine, because there's no real setup that has occurred here on this lower time frame, this 15-minute time frame, whereby I'd get into this trade. As you can see, we've just literally hit the bottom, and then 15 minutes later, and then this current candle we've just moved up. So we've had no pullback. I am looking for a pullback here. I'm just going to go into the 5-minute for a second. So I would like a pullback into here, and I would then potentially look to get long. And let me just put on the trade, create new order. It's 1 micro. I'll be trading with 2 micros. It's a limit buy. So we're looking at a $92 trade. My stop would be an old low. So as we can see, the trade is risk reward wise in our favour. And of course, if we want to expect price to go to the midpoint or the 30% region, then of course the risk reward gets even better. But obviously we can manage that once it gets to it. So this is the trade I'm looking at here. I'm just going to drop into the 15-minute on ES up here as well. So I'm just looking at that. I'm just monitoring this as well. I'm not going to go into why in this lesson. So this was the previous week's low where liquidity sat from the previous week. So any longs who were still in carrying the trade throughout this week, obviously in this move here, if they've stopped resting here, has now been taken out of the marketplace, been knocked out of the marketplace. So the exact same model, system, whatever you want to call it, I've applied here to what I applied last week. Now you'll notice, if you're observant, that we have these boxes. We have Tokyo, London, and New York. These are sessions that I use, and I will look to get into a trade during one of these sessions. Now there's more knowledge around these sessions which I'll be teaching in the Discord, but for now you can see them, and like I say, more knowledge will be accessible through the Lockhill trading server, which is currently free to access. So jump inside there, guys, and I'll be pleased to see you in there. Obviously, by doing this line here, I get the 25%. So you've got 20%, 25%, 30%. And that's what I would aim to, what I'd want to see. So I'm just going to go back out into the 15-minute. And what I'll do is I'll return if price comes into the area of interest. So then obviously this video will be shorter in duration than waiting for price. I'm just returning because I'm closing it on entry. Look at the 1 minute time frame here. Now what I'm actually going to do is I'm going to buy one contract. So this is slightly more advanced execution. Slightly higher at this point. And then I'm going to modify this order to one contract. So we're buying one slightly higher than the other. It's obviously going to show two different separate orders. And the reason for this is we have a level here. So we could drop lower, hit the level and move up, and never actually go into the zone I highlighted originally. So we're still one-to-one in terms of trading. Now people will tell you that you cannot be one-to-one as a trader. Nonsense. It's not true. Of course, higher R makes sense, if lower the risk, the better. But equally, when you have a system like this, a model like this, that's very Very simple, I would say. And all the boxes are ticked. And necessarily not all the boxes are ticked because, as I mentioned before, there's some issues with this trade in terms of the fact that it's a mixed market. YM is not aligned with NQ and ES. We want to see one-sidedness price delivery all week. We had that move up in Wednesday on CPI. And ultimately, this is just not an A-class setup, and therefore I'm trading low risk. The other day, we traded a $700 profit trade, and the risk was around $300, I believe. Now it's $35 risk and $31, so $65 risk if we enter both contracts, aiming for $90 in profit. So, as you can see there, we've lowered the risk substantially, and now we're just waiting for the potential to get into this trade. Go back to 15. This could move without us, but if it does, it does. I'm still not going to be trading any higher than this now. Quite like the fact we have this shallow low here as well in the 1 minute time frame. Liquidity sits here. Now it's really good to get used to watching price action in time, because what this does is it builds that patience and it builds this understanding, and you start to get a feel for price, which you'll never get through anything other than trading. It's kind of quite a visceral sort of thing. So we're dropping lower here and we are approaching the 401 entry. By the way, you can see live account, we're green up here, market is open. The time UK is 12:45, which means it's 7:45 in New York. 4 hours behind UTC, and UK is +1, so it's 5 hour difference in time. This is where it could move without us. It could take that liquidity without even going into the level. If it does that, then I'll look for just a slightly higher position. So again, if I go out to the weekly chart, remember I said in the last lesson, every candle, let me just turn this off, every candle has an open, it will have a high, a low and a close. What we are trying to trade here, we are speculating that the low is in. Price has come down, it's knocked anybody who was long and then they stopped beneath here out of the marketplace, and now as it's taken liquidity, it is then going to move up and close, and it will attempt to move into the 20 to 30% region to close. As I mentioned before, it can go up into that zone, pull back, create a new low, but that doesn't matter because of the actual trade that you get in will have been completed at that moment. So have we had that move to the upside? Not yet. I'm still being patient here. I'm mindful that it could begin to move without us. I'm going to place a buy just below current price. I'm going to pull this down to the low end of the yellow. Now you could say that this is shifting the R to literally it's a 1-for-1. Previous weekly low 20%, but all I can do then is expect, or would like it to see, at least go to the quarter here. As you can see, to kind of pull that into at least a 1.3. So you can see the movement here. Again, I'm going to go slightly higher. I'm aggressively chasing this slightly, but I don't mind doing that because we've got everything we want in terms of the specific model. It's just that from an execution layer here, I think there's an opportunity, just because of this expansion and how aggressive it is, that it wants to go without having a retrace back into this range here. As you can see, it's not really wanting to go much lower. It's showing some form of stability around here. See what reaction we get from this zone. Just take this one off for now. Okay, so we've triggered into the first buy. The second buy order, I'm going to place the low end of here. You can see, because we're in a trade, it's not going to show the profit and loss of that. So we're in the trade now. You can see. Now we'll watch this on the 5-minute time frame. If I was to grade this, I would probably class it as, let's say you was grading your trades with, you know, A plus, A, B, C. It's probably C in terms of probability. It's low in probability, so we reduce risk. And we are doing that here by switching from YM, which is mini, to micro, which is MYM. Don't know why the caps have not come off. So as much as I'd like to sit here and watch price, I'm going to return maybe in the next 10-15 minutes, okay? But of course, as a trader, you really need to get used to watching minute by minute price action. Okay guys, so I am just returning slow price action. And remember, we are only at 8:30 AM at the moment, or 8:26. Remember, the market opens New York time at 9:30. So all of this, what you're seeing here, is classed as ETH, electronic trading hours. RTH, regular trading hours, is 9:30 onwards, where you expect more volume to come to the market. So we have had some quite slow price delivery in this section here. We've weathered some drawdown, and look how the yellow zone where we would have initially sort of looked for that first initial buy, although I went slightly aggressive in here, which is fine. The second buy, as I buy here, what that will do is it'll create an average price. So basically between, let me just zoom in slightly, and let's just remove sort of all of what we have here. Although I'm expecting we could see some resistance here. Get rid of this, we'll get rid of this. So the first buy here, as you can see, where I've delineated the current risk toward the entry point, and the second buy was here. So the midpoint between those averages those buy prices out, which you can see over here. So now this becomes, let me just turn off the magnet tool quickly so I can just get this nice and accurate, is here. There we go. So this is the trade that we are in now. What is beneficial now about being 2 contracts here is the fact that I can take partial exits. So lock in profit. So we could say now that the first target, we're going to aim for that 20% region. The second target, the 30. But if obviously we get really nice movement to the upside, we can potentially start to evolve this and then bring a trailing stop loss on the remaining of the order to ensure we don't take a loss. If you notice, I'm leaving my stop where it is down here because the price action is slow. We could see, kind of delivery where it's like really kind of sloppy. We get to sort of the 9:30 open, we start to see some volatility and volume come in, and then we start to go to the upside. Now, equally, we could go to the downside and we could get stopped, but that is not what we need to speculate on right now. That's what the mind wants to do. It wants to think, what if this occurs? What if that occurs? The aim of trading is we have done all the work, we have our model, we have our system, we have applied our risk reward, and then we manage the trade. And obviously within the Discord, I'm going to be speaking about execution, like the lower time frame stuff, how to get into a trade, all the aspects around sessions, and the key element, which is always time. I'll be speaking about bias. How do we go into each day thinking, is price going to trade higher or is it going to trade lower? But for now, I've taught you a system. I've shown it last week. We're in that same system here. As you can see, we're in profit right now, although price is falling back. I'm expecting that we do go and trade to the 20 to 25, 30% region up here. I'm going to stop it again and return. Probably now at 9 o'clock. We'll see how we get on. Okay. Obviously, we could get some quick delivery that could take us to target or to stop before that. But until then, I'm just going to stop this and return again. I'm just aware of keeping this video as short as possible. Guys, I have just returned, and I've returned at 9:30, which is what? I'll give you a second to give me the answer. The market open. And what have we just seen come into the market here? More volume, which I said would occur, or likely to occur. And we're just literally closing on first target. Boom, first target done. 20% marker reached. Stop can now come to break even. And now we're looking at that higher target here. So we've locked in profits. Partials, taking a partial exit because we're in 2 contracts, means that you get paid as a trader. So 9:30 has opened and gone up, and it's increased the volume. Look at all this time here where we spent chopping around. And we're still looking at electronic trading hours view, but we are now in regular trading hours, which you'll see, look, the candles. All of the electronic trading hours to the left-hand side, all of this is not accessible or viewable on the regular trading hours. It is accessible on the electronic trading hours. Now, what you have seen on the hourly chart, I'll go to for this. Let me just go back to the 15 a second. Let me just take off this. So what you have seen here is, let me just go out, take everything off. I'll leave it on actually. I'm just going to take away the visibility on the... Let me leave it on and I'll take this off. We know that the basic markers for this system is mapping in that weekly open, which is the purple level. Let's flick it back on, the purple level up there. And then we're marking the high to the current low, and that gives us the 20 to 30% marker. We get into a trade built upon what I went through there, which I'll go into more detail on the Lockheed trading server. And as we move up, we should expect a retracement up to the 20 to 30% delineations. And 2 weeks in a row, I have provided you ahead of time the analysis, the teaching, the concept. We've followed it to the T, and we are profitable on both trades. Now, we've reduced risk because of what I've said here in the first part of the lesson, but ultimately we've gone to the midpoint there. As you can see, we've taken a profit here. We have de-risked the trade by putting the stop here. We cannot now lose on this trade, and now we're looking for price to trade to the 30%. Now it doesn't need to trade to that 30%. Because we've traded to the 20%. But ideally, what we want to see is that retracement into this zone. Because obviously it's very early in the market, right? 9:30 has only just occurred. We've got the entire day of trading left. But as you can see there, now there's other reasons that I would bring into if I would stay in this trade. In terms of, I don't want to go too deep now in terms of that, of course. Now look how this risk reward has now evolved. This is evolving risk reward. Because our risk reward in this trade right now is ultimately nothing, because we've taken a profit. Obviously, this is here, risk is above. This is like the trade now, so it's evolving risk. And what I was about to say is there's other elements that would help me to analyse whether we are likely to see the 30% and whether I should keep this trade open. And how I track that for the rest of the day is not something I'm going to go into here. What I've given you is a setup, a system, clear and concise, only a few processes, only a few things to analyse, criteria on how we trade this in terms of risk. Do we trade with max size or reduced size? I've brought in the classes of setups A, B and C. Now, there's a bit of detail that is kind of a requirement for that in terms of execution as well, whether it is a good trade to go for or not, whether we can rank that as an A class setup, a B class, a C class, and if it's a C, we have reduced risk, if it's A, we have higher risk. And I will stop this here. I'll come back if we reach target, whether it be we come back all the way back down to the stop, which I may be managing off screen, or we hit target. Okay, but as you can see, if I go to my settings and I go to executions, it toggles on and off. This is a live data feed. If I click this and take the labels off, the numbers will move and it'll keep the arrows. If I go into the arrows, it will show you my first buy, my second buy, that gives us an average of where we are. This is the first sell, which was the 20%. Look at the green zone where the red arrow is. And we're currently in one contract with a stop in profit. The 9:30, I said, that is likely when the market would come into seeing more volume, more volatility. Has that occurred? Indeed it has. It's gone in our direction. And we've potentially found, that low of the week and thus Friday's low, and therefore we are now looking for it to trade higher and close, and hopefully it will reach the 30% delineation. It's already reached or just short of the 25%. So all in all, perfect system, 2 weeks in a row.